This is Brett Fogle with this week's edition and TA video for you guys. This week is very interesting, a lot of things happening. And as you can see here, I'm just going to kick off with a little bit of news is the ongoing sort of contagion that's going on in the markets, of course, with exposure to the Terra Luna and UST implosion that we know about and the other bigger players that it's affecting. So Voyager obviously is a big one that's just gone into Chapter 11 bankruptcy. I do feel there are more coins or more companies rather that are exposed to this that we just haven't heard of yet. And so I won't dive into too much news. I want to get right into the charts, but certainly this is driving the push lower in crypto. We're seeing a bit of a bounce here today with the overall stock market, but this is important, and the overall sentiment that I want to call your attention to, as you can see in this article, I've got two monitors here, so I'm looking at this one as people saying, hey, I'm done with crypto. That's a good time to be looking for a bottom. I don't think we're there yet, but as everybody starts to throw in the towel and we see real blood in the streets, is a good time to consider start buying in. But I don't think this is going to be a rapid bottom. We are going to likely see some kind of a relief rally here. I've got it written on the charts, but this is the overall sentiment. People, Bloomberg reporting, people saying, hey, I'm done with this. I lost all this money in Voyager. We had trouble with BlockFi, and Sam Bankman-Fried from FTX, of course, has openly said not only are they trying to bail out BlockFi, even though the $25 million number has been misreported, but either way, BlockFi is doing a deal with Sam, but Sam has billions of dollars they budgeted to help other companies get back on their feet. So it implies there are other companies that are going to go under. He's already said that some of these tier 2, tier 3 exchanges are already insolvent and haven't announced yet. So we want to be really careful. And I do advise take your coins off of exchanges if you haven't done so already. They are seeing record sales in hardware wallets because people are doing that, and did this weekend myself. So there's a little bit of public service announcement for you guys. And then one more quick news bit here, the new ProShares ETF short program for people that want to make money as Bitcoin goes lower inherently implies that we're likely headed lower. It's seeing higher trading volume last week as a lot of the longs have been liquidated, people that went in margin long thinking we had found the bottom. So with that, that's a good segue into starting out on our overall macro picture. We did look at this last week, and I've got some new boxes drawn here to give you an overall picture of why I think we are headed lower. And so if we go back here, I'll just zoom in a bit to the 2014 high and the subsequent bear market, an overall drop of 86% from the top to the bottom area here. And it's maybe even a hair lower, but at any rate, 85% is a general guideline of what we're looking for. Last week, we looked at the drop below the 50-month moving average, or sorry, the 20-month moving average down to this blue line, which is the 50-month. So I'll just show you that. And the 50-month, sorry, I look at so many different time frames. Want to make sure double check. Yeah, 50-month moving average. And so this again happened when we looked at this in 2017 and 18. So from the top down to the bottom here, we're bottomed out and bounced on the 50-month moving average, this blue line at 84.26%, call it 85% drop there. So, we're seeing a consistent pattern on this. So what I'm looking for, and one of the reasons, of course, we never know from looking at one repeating pattern, we want to look for clues that further signify or indicate that we'll go to those levels, and there's a number of them. Obviously, we've looked at the weekly, and we'll look at the daily as well. So interesting though, since last week, we have put in a monthly candle here, which held at this right around 19,000 level, 20,000 level. And so far this week, we are also holding that critical 20K level, but we have dropped down below. And so in terms of the overall downside, if we were to draw this 85%, I'll just redraw it here again from the top to a projected low. So that would put us right at around this 84%, right around the high above the 18, well, back to about 10,000 back in June of 19. We sort of saw that happening. But more importantly, down to the the 200 days, sorry, the 100-day, apologies, 100-month moving average. It's tough to jump between these time frames and keep that consistent. So apologies. We have the 20-month, the 50-month, and the 100-month moving average. So this green box here I've drawn is kind of between this 10,000 and 12,500 range as a possible buy zone. So in terms of, do we know that's the bottom? We don't, but that would certainly be a good bounce point if we push down lower, and I think ultimately we will, but it's going to take a while. I'm right now looking for a bounce and hold around 16.5 end of July, early August, and so further downside, but ultimately we could see this push down into these $10,000 psychological barrier. And you know, there are some arguments we could go lower than that. I don't think so, but with anything, you go as far as you can see, and then you'll figure out where to go from there. New information equals new decision. So we want to be patient and watch and wait for the ideal entries before starting to buy into this market. And so I want to be clear that not a good time to be FOMO buying in and thinking that this is going to suddenly rocket ship to 100,000 anytime soon. I don't believe that's the case, but we are going to watch this here, again, holding on the monthly as of this first week of July at that 20,000 level, just below that. So in terms of that, hopefully that's all clear. We'll back this out, but again, these three bear market boxes here have seen an 85% drop from the highs, which again would put us down around that 12,000, 12,500 area at the 100-month moving average. So we'll look at the weekly version of that next. And so just to open these up, we did look at this last week. And in terms of the Bitcoin monthly RSI, is putting in the lowest levels ever that it's ever seen, but then again, it's never gone through a recessionary environment like we are in right now with a war and with all of these other implosions of companies. So not surprising, but again, we don't know if this will hold here and then push higher slowly over the months, or we could see another leg down in here. So I have a big question mark in that that region. So we'll see, and we'll kind of go from there. In terms of the different indicators here, we have the money flow index and the MACD. Money flow index seeing a bit of a bounce here in this first week of July, but of course, these aren't meaningful until the end of the month. This could certainly still head down lower. And we saw the lowest levels of the money flow index here back in February of 2019. And so certainly we had wanted it to hold up in this region, but it's continued to go lower. Not as primary signal, but another one to keep our eyes on. And then, of course, the MACD on a monthly basis. This is where I was pounding the table to get out of Bitcoin and crypto back in January, because we saw this huge run up here. And then when these two lines crossed, MACD is a fairly simple indicator. I don't really use it on the shorter time frames as much. We have some that we've developed that I like on the daily and hourly, etc. But this is a great macro indicator that clearly showed back here in January that these lines crossing down, hey, good time to get out of this market. Was actually the advising back in November when we were peaking, and this gap here between the blue and the red line showing this really this is it, November 21, that this extreme highs of the MACD over the other prices and etc. So we saw this huge run up. It's in this early part from July and back into 2021, huge run up. What goes up must come down. So we have this huge push up in this area here. We're seeing really the inverse of that happening right now. And I think, we could still see one more really big down month. We have 1, 2, 3, 4, 5, 6, 7 of these candles. We have 1, 2, 3, 4, 5, 6, 7, not candles, but on the MACD. So we could certainly start to see a push higher here in July. And but we could still certainly see a little bit more downside and testing some lower levels. And again, I'm looking at that 16.5 level that we talked about last week. All right, so let's jump to the weekly. And so why is the 16.5 significant? Fairly simple. That's right here. It's a little bit higher now because the longer we go to the sideways to go right, it's raising up a bit. I had it around 16.5. These things tend to wick down below it, but right in this 16,000, 17,000, 16.5 to 17,000 is the weekly moving average, the 300-week moving average. Since we didn't hold here at the purple line which was the 200 week. The next logical support is right around this 300 week that I have drawn in red. And if we really go farther down, look like we saw on the monthly, the 400 week moving average, I can just label these here for you guys, is where on the monthly chart we could head to ultimately. But I think in this shorter time frame on the weekly, this would be the strong bounce point when we get down to here. So that's what I'm looking for. And of course, we don't know, but that's what everything is pointing toward to me. And then from here in this region, you see I've drawn in this this red line here a possible bounce, which I do think will be a bull trap and rally here. I possibly, in August here, although typically August is low volume. All the big stock market Wall Street traders usually go out to the Hamptons. They're seeing as when in May go away, and then they come back in September. So I don't know. We'll see, but certainly once we come down a little lower, I do think we'll see one more push down, and then one more capitulation candle down around the 16,700 to 17,000 region, and then kind of push up higher, bouncing, topping out. Whether it goes as high or not, I don't know. Certainly around 32,000. But the green line here, which is the 200. I'll make sure I'm getting that right. There's so many in here. The 100 week moving average, which was support, has held its support back in the past here, and then again back in here and here. So that will now act as resistance more than likely. Okay, so that's why I'm drawing this line of what I expect, kind of where I'm leaning towards. Push up higher into the 34,000, 32 to 34,000 region, and then we'll see further selling pressure come back down and possibly push down to this 400 week moving average at around 12.5. I think 12.5, possibly as low as 10,000, which we are looking at on that other monthly chart. So this is really my buy region where I'll be looking to accumulate more Bitcoin. And so as Bitcoin leads, the market follows, and so this is our North Star. Ethereum and all the altcoins will follow a similar pattern more than likely, but we have these sort of accumulation distribution zones, and nothing goes down forever. So that's what I'm looking for. If we do drop down and have a stronger push lower below this 300 week on news or any other developments, but I don't think that's going to happen. I think we're going to see some kind of a relief coming into, in the end of the month or August, sort of bounce pattern. So this is the RSI on the weekly basis. Again, we are at the lowest levels that we've ever seen. So that's significant, starting to bounce a little bit, but these tend to kind of come down and retest a little bit as well, as we have seen back in these other areas. So we'll keep an eye on this. The other one I want to look at here is this stochastics oscillator, or the stochastic RSI. I'm trying to open this up there, and here we go. So what we do see on this is usually a double bottom, which we saw back here in August of 19, and then back in May of 21. So it dropped and bounced, and again in the end of the year, December of 2021. So we came down and hit this zero line, though. Really haven't seen, in the times we've come down and hit that zero line, a couple times it's bounced from there. So it highly oversold. Doesn't mean that it can't still come down again and change course, because we're only halfway through the week. By Sunday, 8 p.m., when the weekly candle closes, then we'll see where we're at with this. But I think we are nearing some type of a tradable bounce here, and we just want to be careful and not try to catch a falling knife. And this was our trend strength indicator, which is our proprietary indicator that also I'm waiting to see when it turns green on a weekly basis, and that works very strongly in terms of with some of our other indicators, like our early reversal indicator. Let's jump to the daily here. Here's Bitcoin on the daily basis. It's playing out. It's exactly how I've suggested it would, just in terms of a little bit of review. I had posted here on Facebook May 19th that we would go from where we were up to 30,000 and then back down to 20,000. So that was right in this region where my cursor is, and we pushed right up to 32,000 in this area, and then dropped to 22K, went straight down to 22K, and then held there for a little bit and that point. And that happened June 14th. I thought it was going to happen by June 4th. So missed it by 10 days. And but then again, it's played out almost exactly in this way. So here's the overlay of that. I'll just turn off the Bitcoin or the Facebook, but this is an overlay, by the way. So this here is how we saw this pull down and then push up 32,000 down, or rather push up to 32,000 down to 22,000. And so where we are now, where I think we will head to ultimately is at 16,000, which is going to be down in here at 16,500. So we'll keep an eye on that. But this is sort of, I drew this last week, this curvature. So we're pushing a little bit higher here today. I would expect we kind of head lower later in the weekend. Then we see that push up back up to around 22K, possibly higher. But really, in terms of where do we go, I'm waiting to see when things get down into this buy zone, which is sub 14,000 and as deep as down potentially 10,000. But I think 12.5 we will see some kind of meaningful buy and hold or hold pattern there. All right, so let's do this. And I want to pack in as much information as I can for you guys this week. And by the way, just so you know, I'm going to be doing a more in-depth training tonight at 8 p.m. Today is Thursday, July 7th, and at 8 p.m. If you'd like to get registered for that, it's for Ryan. It's for Max's group here, only for tonight, and you can register for that at go.moonstream.me/crypto market update. Sorry, that's a mouthful. So it's moonstream.me/crypto market update, and that's in conjunction with Max, of course. To give you guys a little more detail, we try to keep these short and sweet on these weekly videos. So with that, let's jump over to a couple other things. We'll look at Ethereum really quickly here, and then I want to dive into some of the indexes, because I am seeing something interesting on the DXY that could contribute to a big push higher on Bitcoin. Before we do that, here is Ethereum, chart of Ethereum. Again, I think our buy zone is much lower on these. I wouldn't be buying in just yet. You can see I have a line here pushing down. I think extended out a little bit, but don't know how it really gets there. It will follow Bitcoin, but down in the $500 to $600 region. This is my possible buy zone, and I have alerts set along the way, all the way down. So 900 when it breaks below 900. And the reason is, if we zoom out on this, I always say, when in doubt, zoom out. We can see back here in November of 20, before the huge rally, there was a lot of liquidity in that zone between 500 and 650. So this was previously a resistance zone and then became a support zone and accumulation zone. So now if we push down back in that area, that's where I'll be looking to really back up the truck on Ethereum. Certainly at 500, it would be a great buy. Not to say it can't go lower, but in the scheme of things, if you believe in crypto long-term, $500 Ethereum will be a great buy in the long run. Many believe it'll flip Bitcoin in terms of total market cap, and so we'll see. But those are the two leaders. And so let's see. I want to jump over a bit to the let's see, well, we looked at here's interesting. I want to touch on this here. The futures, Bitcoin futures has been playing out fairly well in terms of filling all these gaps. Earlier in the year, we were looking at these gaps and saying, wow, I really doubt we'll see a Bitcoin at sub 28.5 again. See this gap right in here, and hopefully you can see that. I'll just move that. But sure enough, came down and tested and filled that gap, and now we've broken through to fill that gap, as well as where we are right now at the December of 2020 gap down here on this 18,500. So we just came down and hit that one here this past week. So very interesting that these CME gaps are filling even at these lower levels. So here's one more point of confluence where we could be looking at lower prices on Bitcoin, because this gap here is down around 10,000, just under 10,000, which would be a little lower than I was projecting on those other areas, but this could be that final capitulation zone. So Bitcoin sub 10,000, we'd be looking for filling the lowest I think we'd see is around 83.75. That would be this gap all the way back here, and that would cover all the CME gaps going all the way back here, except for, let's see, just looking at this one here, there's one back here on 6,500. So we just don't know on these, and that would be where this zone here would be a big liquidity pocket here. Let me just draw this a little bit larger. I've got a wide screen, so you see me looking all over, but this is why. And just to kind of block that out. So this is a much bigger sort of accumulation zone that if we get back into these levels, all bets are off, ABO. And so we want to wait and watch for indicators that would indicate we're bouncing and we're going to go higher, which I'll share with you a little bit here today and also tomorrow. I'm sorry, and tonight on tonight's session at 8 p.m. For Max's group here. So interesting to note. Let's just kind of keep going and see where we are in terms of today. I want to look at the dollar index, DXY, pushing higher. I think this 108 level is really a high level that we should see some pushback from. And as the as the DXY comes down, it's an inverse relationship with Bitcoin. So the DXY and USDT dominance, both an inverse relationship with Bitcoin. We'll look at the USDT dominance next, but you can see that the DXY is pushing higher here. I know there's a lot of lines. I could get rid of a few of these, but in terms of going out, zooming way back out here, this is let's see, about as far as it's going to let me go, but let's see if we go to a weekly basis. We are pushing into areas where we haven't seen the DXY pushing up in these levels since 2002, and even the last time it broke up above these levels was back in 1990, 2000, about around 2000. Let's see, right in the zone here of April of 2000. So if you remember what happened in 2000, big stock market crash. So this push higher on the DXY was correlated with that big stock market crash, and so we were in this kind of a big push higher, and we want to keep an eye on that. However, since we saw this zone right around 108 was a kind of a resistance support zone here, I would expect some pullback on this, and typically I'll use the EMAs for stocks, but it's gotten quite a bit far away from its exponential moving averages. So I think we'll see a bit of a push higher on the DXY, and that could be this rally where, pushing Bitcoin back down, and then as DXY kind of pulls back, then we'll see that Bitcoin rally, and but it'll be short-lived. I think that these are DXY is pushing higher, so keep an eye on that. I have been following this more closely. This is the USDT dominance. And as we looked at last week, again, an inverse relationship with Bitcoin. As we looked at last week, there was this bear flag pattern that we were watching a couple weeks ago. And once we noticed it, projected where that would go. And sure enough, that bear flag completed, pushed up to this area where we're seeing there. I'll just drag it over to the side. And you can see, then it pulled back. So where we are now, I've projected that, pull back on the DXY as money flows into Bitcoin and crypto along with the stock market, and then we'll see the USDT bounce again, which will correspond with that next leg down in Bitcoin. Again, inverse relationship. Hopefully you guys are following along. And so, we can chart these things, and that's what I'm projecting here on the USDT. So we'll watch that. Again, big question mark though, because this is largely a news-driven market, although I will say, show me the charts and I'll tell you the news, because very often the news has already been disseminated and digested and priced into the markets, because a lot of the news is lagging indicators. The news is often leaked, or there are smart hedge funds that are on top of these things before they even get to the news outlets. So, certainly be careful. In fact, I don't advise at all trading off of news unless it's breaking news, but even then, typically you'll see that it's the old buy the rumor, sell the news kind of a thing. We see that all the time in crypto. All right, so with that, and by the way, if you have any questions or you want us to look at any coins down below, I am gonna look at a few that you guys had asked for last week, and one of them was Engine Coin. We can look at this. We can look at a few of the other ones that people want to see, like ADA and Chainlink. So let's go ahead and jump into those. Let me change this. I'm gonna see. Well, we can do this. We'll do both. I've got several watch lists here, and let's kind of go down the list, because what I do like to see is which coins are stronger in terms of the others in a percentage basis. So we see Polygon Matic having a nice little push up here. I don't know. I think this is a resistance area we'd want to see broken, but that's why during these sort of downtrends, it's a good time to set your alerts for when you would be interested in buying these. I like to buy into strength, and so if Matic can get back above this downward trend line here, I'm going to set an alert here at 65 cents just so I have an early alert that it's crossing up on that. And you can also set these here, and so you know what the alerts mean. So a possible breakout like this, and that's how that alert will show on the on your alert. You can also put it here in the alert name. So that'll be interesting to me. If that happens, then I might say, all right, I see strength coming into this market and above 65 cents. That to me is a sign of strength. But mostly what I am looking at here and would rather do is buy when it comes back down into this 30-cent range. And I'm going to reset this alert here, crossing down 30 cents, because if this is an obvious buy zone. And so we saw that back here in early 2021, where this became a resistance, support resistance, and accumulation zone. And so the fact that we're seeing it bounce right out of that zone again, if this Polygon, if you're following that, this might be a good area to see where that would go. And I might just check on some of these indicators that that we like to watch. And you know, this is sort of not obvious, but we'll talk a little bit about that on the weekly charts. If we see anything we like, that's something that I do like to follow. The weekly chart reversal patterns are going to be the ones that follow through for longer periods, and most of us don't like to be day traders. You know, swing trading is anything from a couple days to a couple weeks or a couple months even, so that's where we have the biggest advantage and against the big institutions and hedge funds. So right now I'm looking at the daily patterns. Again, I think we are seeing a kind of a relief rally here, but we're kind of coming into resistance areas on these downward trend lines. So we'll keep an eye on that and see what happens. Let's see, Eagle, many of these are in a very similar pattern here and still coming down. Like even if we are putting in a bottoming pattern, generally these will retest these lows here. So we'd want to see something like this. And it won't be a straight up kind of a pattern, but certainly a retest of the lows that held, in this case, Eagle at around $40. But you know, listen, guys, these are probably not the lowest of the lows. So I would be cautious in buying anything here without a tight stop loss. So if you're going to be doing this or going for swing trades, use this trading tool, which is pretty good here that TradingView has. So let's say that, well, I don't think this is a good buy, but if you bought down here, and what you'd want to do is drag this tool to where you think the high is that it could go, and then to really lower the stop loss. So I don't know why it's set it so low here, but in terms of, let me just get this back. This is giving me trouble here for some reason. There, okay. So what this means is, and that's a bit extreme, you want to have at least a 3-to-1 risk reward ratio on these. So if you kept, let's say you bought down in this zone here around $40, and let's set an alert for that. It's not financial advice, by the way, and certainly not making these recommendations, but this is more for education. So if it came down to 40, for example, because that's a support level, this would be probably a worthwhile trade here in this region, and with an upside of, say, this area here, the last resistance. As long as your risk reward ratio is 3 or greater, I think that's a trade worth taking, as long as you have stop losses set here below the recent lows. And people often ask me, where do I set my stop losses? Is it a percentage? I don't like to use percentages because that's kind of an arbitrary number. It depends on where you bought in, and you might not have had a great entry. So I always set my stop losses a little bit below the most recent swing low. Now, we do see a lot of market manipulation, and market makers dip down below and take out stop losses. So preferably you're using a third-party platform that doesn't keep the stop loss order on the exchange. There are some out there where basically it'll send the market sell order when that price is hit, but so that the market maker algorithms don't see it and they gun for the stops, which happens all the time. But either way, be safe than sorry, and make sure you're keeping those stops. So let's kind of look for some more that are looking strong. Polygon's up 7%. The rest of these are sort of languishing. And here are some good opportunities, though, to keep an eye on. I don't necessarily recommend shorting. It's dangerous business, but if you know what you're doing, these trend lines can be very effective. And so basic attention token here hitting trend line resistance, and is also, let me just do this, our early reversal indicator in red, a double red arrow. So I had been looking at this and bought this down on the lower end of these trend channels with the early reversal indicator here that I'm showing, and now we're showing red ones, which is a good sell signal. Where would I be looking to buy again? At the lower end of the channel. Again, I'm not recommending BAT necessarily. This is just a nice chart pattern for you guys to learn from, and have my alert set at 21 cents, just above 21 cents, because that's the bottom of this channel here. And my confirmation would be one of these ERI signals that is one of our proprietary indicators. I'll be talking a little bit more about these tonight at 8 p.m. Again, if you wanted to join me, I'll be doing a little bit more in depth TA for that, and when and where I think the bottom will come in. And it's not an exact number. It will be certain patterns that I'm seeing that will tell me and confirm that we also saw at the bottom of the market back in July to the day, and in September, and also the top in mid-November. All right, so let me do this. Just skimming through these, Atom, Cosmos, another one, had some nice bottoming patterns and early reversal indicators. This actually looks fairly good to me in terms of where we are looking for a possible entry, but it's all going to depend on the overall market here. The nice thing about this pattern is it's broken above that downward trend line. Atom does have a tendency to march to its own drum, and so this might be a good one to switch over to the weekly, because I saw this happening previously last year when everything else was kind of going down and Cosmos was pushing higher. And so when looking at the weekly, these ERI signals are very accurate. So this is a small arrow ERI here. I do like this as a liquidity pocket. We saw that back in midsummer. This was the low for Cosmos. So with any strength in the overall market, I'll be keeping a close eye on this, which is Atom. Also our trend strength indicator, it's our own in-house oscillator. This is a weekly chart, and again, it's turning from red to green. So this is very interesting. Bitcoin is still flatlining in red on the weekly. When we see this indicator break above the 20, typically we'll see a few weeks of nice upward buying pressure, as we saw back in here. And let's see, that was a nice 300% plus run on Atom. So that was one of the ones at the top of my list. I'll keep an eye on that. Let's see, Harmony One had some bad news recently with a hack, and so it's up 7%, but I think it's an oversold bounce. Let's see, we'll stick to some of the top bigger names here, but just Algo quickly. I'll turn off this ERI for now. These are coming down in these ranges of where they might, I don't want to say might and be vague. This doesn't look great to me. The Terra Luna's, of course, is finished. The Luna C, the new version, is showing some signs of life, but I'm gonna kind of keep my distance from that for a while. Aave up 12%, nice bullish engulfing candle. And let's see, this is also a bullish opening wedge here. So these tend to resolve to the upside, but that might be a while. Let's see though, kind of interesting. I like that, the TSI is going green, and would look for a push higher at around 120 before these things kind of roll over. That would be likely resistance area. So some of these other ones here, I was seeing some interesting movement in the metaverse coins. So Sand, not quite ready to go. I think, want to be careful not to be recommending getting back into these markets here. We are still on the weekly basis, but let's see, Solana is interesting. And a lot of people miss Solana. I called it at $35 here back before the big run. and see what goes back in here actually. But we're coming up in that's kind of that region where Solana would could be interesting with any market strength. Solana is a great project, and we could see that kind of run higher. But right now it's underneath this trend line support area. So I don't know. It's I like Solana around $20, and this thing could find some final bottom here. A lot of other ones in here. Let's see, ENG. Well, this is one of you wanted to look at back from last week. So I think it was Engine Coin, and these are tough. The indicators that I look for are our early reversal indicator, which I'm seeing. So this kind of gives us a secret weapon here, and the trend strength indicator is pushing higher on Engine Coin. I would be more comfortable with it pushing above this 20 line, but also I'm looking for this signal line to go green. I know you guys are wondering what these are. These are some proprietary indicators that we created, and I'll be able to go into a little more detail on that tonight. So let me turn that off. In terms of other indicators you can use, like stochastics and RSI, but a lot of what I use are the exponential moving averages, especially when we're above. Let me teach you one trick that I haven't shared with many people. When we are in a bullish market, one of my favorite indicators I've called the rocket on the launch pad, okay? And so what that is where we see a candle, I see two of them here, that's sitting right on either the 21 or 50-day moving average with a wick down below. Just past 4th of July, so it's a perfect segue into the rocket on the launch pad indicator. And just think of a firework or a bottle rocket when you light the fuse and it shoots way up in the sky, and then boom, it falls back down to Earth. So where do we see some of these? The best example of one of these is, let's see, right in here, this candle that I have my cursor on. Hopefully you guys can see that. I'll circle it too. So this one here is a rocket on the launch pad. So the real body of the candle is sitting right above the moving average, and the fuse or the wick down below. The best ones are when the body is right on the moving average. So here's a better version of it. Can you see that? So the real body is on the 50-day moving average. This is 50-week actually, and then the wick is down below it. So just imagine lighting that fuse, seeing this thing fly up into the sky where it falls back to Earth, which is what happened. Okay, so these are great to watch for, especially on the daily basis here. So, but it is best in terms of watching for that on the daily basis here in an uptrending market. So, we're certainly in a downtrend here. That's one of my favorite bull market indicators. They don't work as well on the downside, but it's one of my favorites when we get back to a bull market. I'm just looking for one more that we could show you here on a daily basis. And tell you what, let's go on to a different coin, and we'll keep an eye out for some of these other ones. Just wanted to throw that pattern out for any of you that wanted to learn something new today. All right, so let's see. So why don't we do this? This is actually some of the ones that I'm following personally, and I was skimming through those as more of a overall anything that's moving. And you guys can use the crypto screener, by the way, in TradingView. What's up today? What's down? Signs of strength is always a good thing to keep an eye out for. All right, we looked at basic attention token. Rune is one that has been interesting, and it's still in a downtrend. So these are invalidation patterns for me. Where would I be interested in something like Thorchain? Well, breaking above its 50 period moving average. Now, here's what is interesting. So, we are seeing some early clues. It's above its 21-day moving average, but again, it's really, for me to have any interest on Thorchain, I'd want to see it back above $3. Okay, sign of strength. Why is that? Well, the 50-day moving average in green here and this downward trend line resistance are both going to act as a resistance area, and we have double trend line resistance here right in this region. So that should be a red box. Let me just change that so nobody is confused. And let's see, I have another menu in the way. All right, let's do this and go like that. So this is a resistance zone because we have this trend line resistance here, and then the bigger overall macro one coming down from the high. Let's see, maybe just overlay the ERI on that. Getting a little bit of a bounce indicator on our early reversal indicator. Generally, these are best when there's two or more of them. So what I would expect here is a push higher, a little bit of a rally going on in the markets like we've talked about, and then push higher, hit that resistance, and come back. Now either it forms a support, which would be a higher low, that would be bullish, or coming down in here to retest the lows around $1.50. So these are some of those things we're looking for, either higher lows or retesting the lows, so we see more of a W pattern here. It's a little bit sloppy. So these are some of the patterns you can kind of watch for in terms of when we are going to start to bottom. And so let's see, we would want to, I just want my arrow tool here. Not really an Elliott wave guy, but sometimes that's interesting. And I've got this widescreen monitor here So essentially a W pattern. These are great for catching bottoms. So that would be what I'd watch for, or a higher low. Okay, so anybody, if you have any coins you want to look at here or want me to draw on, tell you what, again, if you want to join us tonight at 8 o'clock, that's a web presentation, a training I'm going to be doing a little bit more detail for Max's group here. Just go to go.moonstream.me/crypto market update. And that can be all lowercase or multi-case, but pretty much lowercase is always better. So it's again, go.moonstream.me. Just trying to keep it short and in the slide. And there's me, of course, in front of my trading setup. And you guys will dive into a little bit more. It'll be interactive, so you can come and ask questions, and we can look at some coins live together, because I really want to help guide you as best I can as we start to put in a bottom here in these markets. So ADA now looks pretty interesting in terms of what I'm seeing with ADA. Now, these are potential trades you could consider, and I'm not suggesting that you do that, but we look at this sometimes. And so these are two different, I believe these are two, no, the same one. So if we like this area right down here, which seems to be a bottoming zone around 45 cents, this is a trade you might want to consider with a tight stop loss, because again, a 3-to-1 risk reward ratio is ideal. Right here, that's a 6.72. Let's just bring this down a little bit. Let's say that the 50-day moving average, which tends to be great resistance indicator, right? These coins, many will come up to test that 50-day moving average, and in this case, there's this trend line resistance coming down. So we want to use as many indicators as we can as sort of that area of confluence. So let's say that our likely resistance or reversal zone is right here around 52 cents, 53 cents right here as a target. So in our stop loss, we'd set just below the low of the most recent wick down. So in this case, we're just below a 3.0 risk reward ratio, but I would imagine it comes up to that 50-day moving average. So this is a decent swing trade, but also because it's this kind of putting in this bottoming pattern, right? So in terms of what we're seeing here, it's really holding well with in terms of the overall market bleed out. And so ADA, we used to joke, stands for add a dollar always. We were starting to call it a stable coin because it was just always kind of right around $1. But at 50 cents, if you liked ADA, add a dollar. This is a long-term good play. I'm not a huge fan of ADA just because it's a slow mover. I tend to like faster moving projects. Chainlink, similarly, putting on, let's see, Chainlink, there we go. But we are seeing some bottoming patterns here. The thing is, I think we are due for one more big capitulation down, and these lows here are tricky, and they're pulling the longs and the bulls back into this market, where I think this next push higher is going to see something like that, and we're going to go lower, and that's just a guesstimate. But so be very careful. We don't want to try and catch a falling knife. Probably heard that before. And so this is a time to be careful. Now, certainly it's time to possibly start dollar cost averaging in, because in case we do really push up higher, I feel pretty strongly that we head lower with everything happening in these markets. But if that were the case, you always want to be trading on probability. So to trade the probability here on any push lower or even in this range, consider accumulating some Chainlink And if it goes higher, then great, you can add to that position on any pullbacks. But if it goes lower, you can also dollar cost average at these lower levels. And so in terms of where that might be for Chainlink, just again, when in doubt, zoom out. These ranges, the COVID crash low was $1.45, right around $1.50. I mean, these are great places if you know, everyone. I'll acknowledge that most of our capital is less than it was, but for those of you that have powder dry, which you should, and I've been recommending getting into cash since January, these are great limit buy order levels. And so because when they do drop that far, it tends to be in a panic. It's another great way you can make money in these markets is set these levels where you saw a strong buy area in the past. And so if Chainlink hits $1.50, see how fast it bounced off of the low back at the COVID crash. And we might get some more of that big spike down, panic selling, which immediately is followed by pushes higher. So getting these buy orders in at some of these levels, I think 350 is another good one because that was both an area of consolidation and support. So, you know, in terms of at least having your alerts set on these, so when they hit, you can keep an eye on them. And in the long run, it'll be a great time to accumulate and buy in into creating a position and a portfolio at lower prices. But you know, I wouldn't go all in here, certainly. And if we do push higher, you know, be careful, be ready to take profits on these, whether it's this coin or any of the coins. These trend channel lines are very effective ways, especially in a downturn, of knowing where your areas of support and resistance are. Here's another trick and tidbit, by the way, on when to take profits. A lot of people ask, when do I like to take profits on things? The Bollinger Band indicator is a great one, but not right off the shelf. There's a tweak you can make. Let me turn off the EMAs here. So the Bollinger Band is great for capturing swings on different coins and projects. The Bollinger Band right out of the box, though, is a little bit different, and it relies on the second standard deviation. I have mine set at 3. So the reason for this is the way to use a Bollinger Band is when the price action's hitting or going above the upper band, typically it will pull back toward the median, and often my good friend Steve Nissan taught me that it'll go to the opposite extreme of the band. But in crypto, the volatility is much higher, so the standard version is this 2 standard deviations. It's a bit of wordplay. The regular version of a Bollinger Band, which you can find right here in your favorites or in the these are available to everyone, Bollinger Band. The regular Bollinger Band, I'll just put that on here, isn't quite wide enough, right? So in this case here, the standard one, I'll turn this one off, is a second standard deviation. So the price action will often go above that or below that, right? So you can see that here, and we saw it push above that here. But if you'll go in and instead change this to a third standard deviation, you'll see that this captures the price movement much better. And I use this as a tool for when to sometimes buy, but very often when to take profits. So we could see up in all throughout this area, and I'm just doing this at random, back here, we hit the upper Bollinger Band, pulled back to the lower extreme, higher extreme, back to the median, higher extreme. So these are great sell points when your coins and projects kind of get hit or touch. Here's another good example, or go above the third standard deviation Bollinger Band. Now, thing is, you only need to change that one time, as I just showed you. So, but here's a great example. Touch the top of the Bollinger Band, the 3BB was what I call it, and it pulled back down and then ultimately down to the lower extreme. So that's a great tip you can use for getting out of your coins, especially on the way up. Okay, so let's see, guys. So what else is looking good? Atom, we looked at already. We haven't looked at Algo. Yeah, we can take a quick look at Algorand, but it's just been hammered here. I don't think these are, I don't know. I'm not ready to be buying in many of these projects. Gala is coming down. It's finding resistance on this trend line support, or this resistance trend line there. So that is not something I'm interested in yet, but I have alerts set where I'm want to be alerted. So right at $1, and if it breaks above this area, 70 cents. So these are some good areas where you can put your alerts. So anyway, guys, hope you enjoyed this. I'm getting some great feedback on the project, or sort of the the TA here. And if you'd like to, again, kind of dive in a little deeper and look at some other projects that I think are looking really interesting, and some of the things that we watch for in terms of where and when to buy in for the longer term swings, typically on a weekly basis. We're going to take a look at some of those tonight, and some of my top recommendations that we just don't have time to get into here. But I will just dive into, want to share you the hourly on Bitcoin, just to kind of see where we could be headed. So it's interesting, this pattern here is a symmetrical continuation triangle, and Bitcoin came from up top here, and so down it's sort of a five-wave, potentially a five-wave Elliott wave that would break to the downside, which you can see in this pattern. This is typically how they play out if it comes from a higher price down into this symmetrical pattern. So we have the one coming down here, the 1, 2, 3, and then if this is the fourth and we do pull back, then likely we'll push lower down to that 16,800, 17,000 region that we looked at. For those of you that are still here, I want to save the best for last. So this morning's push higher and pump, which put it above this symmetrical triangle, I think was a fake out. I could be wrong. There's the, if the DXY pulls back, starts pulling back hard from the levels that it's at, then we could likely see Bitcoin really pump higher. But as we've seen in these markets, now this, hold your eyes, because this is these are some shorter term time frames, and I don't want to give anyone a headache here. But if we look at the 3-minute, let me just move some of this out of the way. From today, it really pumped higher here, right up to 21,200, and then it promptly dropped back here. So what kind of a pattern are we seeing here? Well, I don't know. It's almost like a Bart Simpson pattern, where it goes one of these, like his hair, and then we see the drop. But in terms of volume, we saw some decent volume coming in. This is something I'll be watching. But as of now, let me just kind of, open this up a bit and turn off some of these other indicators. I've got an average true range and a VWAP, standard deviations, on there. So, but this is interesting too, though. This is a 15-minute candle chart with Heiken Ashi candles. And so we're seeing the Bollinger Bands tighten, however, so it's going to break, very likely break in a significant way to the upside or downside. I will say this, though, let me take that off, because typically these kind of patterns break higher. So I want to see how this plays out with this Bollinger Band, the tightening, and the rising moving average. Generally, we'll see some of this type of movement. How high will that go? That I couldn't tell you. I typically do watch this a 200 period on a 15-minute chart. I know that's a lot to absorb. Well, we can dive into this a little bit more tonight, but in terms of this, we are in a bullish upswing. Typically and traditionally, when we're above that 15-minute, the 200 period moving average, this big purple line here gives a pretty good sort of overall, where's the wind blowing? So when it comes down below it, turn off this Bollinger Band here, a lot on here, then it's resistance. So right here it acted as resistance. Here was a fake out, came back down below. Fake out here. Now we're above the 15-minute, the 200 period, rather. I should call it the 200 period moving average, and that's a 15-minute chart. So I don't know, guys. This would indicate we have some bullish momentum here. So the really big indicator will be, does this hold? If we break above this level on the second area, then this pattern will be invalidated. So the high of this, if it breaks above this, then this symmetrical triangle, the bearish symmetrical triangle, will be invalidated, and we could see higher pushes higher, which I had showed on the weekly chart. And so we're going to keep an eye on that. What I will do is put an alert here right at 22,000 to see if we get back above it. This could be a bear trap where they're trying to get people bearish and buying lots of shorts, which these market makers love to liquidate margin traders, and that's a sport to them. So certainly, I would recommend staying away from margin trading in these uncertain markets. So anyway, this is what all eyes are watching, and we've got the CPI coming out soon. That'll be the next indicator, and then of course the big thing everyone's waiting for is the next FOMC meeting with interest rates toward the end of the month. 75 basis points has been priced in. So a couple things can happen. If the Fed feels that they've done enough damage to the stock market here and they have a surprise lower rate hike of 50 basis points, we could see a flash rally, but really they've signaled that they're not done. They're going to continue to raise interest rates into the fall. And so I think the Wall Street would see through a a smaller hike, because then we would assume it'll be 75 basis points again on the next meeting in August. So that's kind of where things are. We watch the charts. Again, show me the charts, I'll show you the news. And so right now what we're seeing is Bitcoin rallying along with the overall markets, the Dow and the NASDAQ seeing a bit of relief rally. But here's again that overall projection. Either we'll push down lower that 16.5 area, or if we do see a rally, the other option would be coming up into this region around 26,000. Could be a little higher if it goes straight up. Let's see, I think more realistically, if we get a bounce, it would be something more like this, 27.5, and then we'd start to see that final push and capitulation lower towards 16,500, which again is that 300-week moving average. And so, from there we'll see. But again, I'm out of time, I think, for today. Hope you enjoyed that. I'm certainly enjoying these with you guys. And if you enjoyed that, please put a comment down below so Max can gauge how these are going. And if you have any questions, put those down. I'm answering questions as best I can. And if you have any coins that you'd like to see me do a TA on tonight, again, all you have to do is go over to that link, and that'll be an open interactive session. Hopefully you can see that. Sometimes it's a bit cut off here. So what I'll do is I'll put it in this format so you can see the link, because I'm on a widescreen monitor. It's go.moonstream.me, and that's / crypto market update special class for everybody here on Max's channel. We were old friends and go way back, so happy to do that. We'll have more time, and I will stay on until I outnumber you guys, so please do join us tonight, and I look forward to seeing you there. Have a great day, everybody. Bye-bye.